Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. Today's video, let's look at the accumulation from the smart money on Bitcoin using our Wyckoff analysis. It's the update. You guys have been asking for it, so make sure you are subscribed with the bell notification icon. Click that like button as well. And I'll remind you at the end of the video if you prefer to wait to see if there is some good value in here, especially like some of you guys who are mentioning comments down below around the news and TA, like Mr. Macintosh Man. After your last guest, I've started to believe news is usually just the catalyst for price action. You demonstrated humbly here that TA does give you a huge edge when navigating a market full of noise. And if you do want to learn more about trading and investing using the charts to stay in front of the market, ahead of all the noise and the news, definitely go and check out the Investor Accelerator Premium. It's our courses and membership down there. We do weekly live streams. There's over 30 hours of trading content there. It helps you build a plan and basically get towards your goals in trading and investing. Now, this is the first time I've mentioned it to anyone publicly that this is going up in price. We have added a lot of content over the last year and a half since this has been going, a little longer now, and it's due for an increase. So if you do want to score yourself at the current lowest price, check it out. Link is in the top of the video description. Go over to TIA Premium and join over there. Plus, join the free newsletter for any other updates coming down the track. Mr. Man's comment is particularly timely, especially for today's Wyckoffian update. Understanding that the news is out there to distract us and get us thinking in different ways, and to see that the TA is basically trying to give us signals before the market does something, does a big move, is very similar to what has happened in the past, what other experienced investors and traders have seen. So this is Bernard Baruch. Show me the charts and I'll tell you the news. Maybe you guys have heard of that before, but this is the guy that said that. Have an opinion on what the market should do, but don't decide what the market will do. That's why we always talk about this is our opinion of the up, the down, the sideways, and how we're going to manage that risk and reward. But we don't have to be firm 100% believing that it has to go to, example, $100,000. This is the way of the retail, which is why they always get slaughtered. So have an opinion on where you think it's going to go based on your analysis, but don't be so firm in 100% what it has to do. So be happy with a percentage of the move. It's exactly what we talk about all the time here, by aiming to take a chunk of profits out of the middle. We don't need to buy the low. We don't need to sell the exact top. We need to take a chunk of profits out of the middle. And this is what Bernard was able to do, nearly 100 years old here, and was an American financier and statesman. After amassing a fortune on the New York Stock Exchange, he impressed President Woodrow Wilson by managing the nation's economic mobilization in World War I as chairman of the War Industries Board. So this is coming from someone who was at the top of the game in the US, in the world at the time, saying specifically, show me the charts and I'll tell you the news. So let's see what the charts are currently telling us. All right, so we go over to our Wyckoff analysis here, looking at the phases. That's the main thing I want to look at in today's video. Phase A, B, C, D, E. Now, phase A may have been up now. We might have just run through phase A, which means we still have more time. We still have more time through phase B, phase C, phase D, of course, the prices start to get a little bit higher. But if this is the trading range that we are currently in here, between 17.5 and 25K, then we may still have a fair bit more time. But the FOMO is going to catch a lot of people off guard should we get some big moves to the upside and some rejections at high 20s or low 30s and coming back down. The trading range could extend here, just like we see on the Wyckoff schematic. So for phase A, just to clear up whether we are in that or out of that, we have a few notes here on the weekly chart. Phase A marks the stopping of the prior downtrend. So I think we could almost say that this is the stopping volume here. This is a selling climax. Even if we are to scoot a little bit lower, this has definitely shown over the course of time that it's most likely the selling climax, and it has put a stop to the market all the way up to now, which is coming on to 4 months, another couple of weeks away from 4 months. All right, so this is the selling climax. These events are often very obvious on a bar chart. So here's our chart, here's our bar. That's a big old bar right there. And they also want to see a widening spread and heavy volume depict the transfer of huge numbers of shares from the public to the large professional interests. So there's your wide range. You can see it's a massive ranging bar compared to anything that we saw previously. Even if we squeeze up the chart, it was one of the biggest ones, even with these other two big weeks here. Weeks. And then we also saw the biggest volume here on the index chart. So this is an accumulation of all the data out there. Basically, one of the biggest volumes since that May drop. And that also basically timed the bottom. Sure, it went slightly under back in June and July after May, but that gave you a really, really massive signal that it was a huge bar, huge volume. Market went sideways for several months before it started to move. Yes, we're in different conditions. This is a longer bear market, so this could take much longer to accumulate, which is why I say we still have time here to accumulate, but some of the signals are starting to show up that this has been the smart money accumulating. Now here at the other end, there's a lot of people saying, well, we told you that then, or someone else is talking about, I said June was the low, and they're trying to call things at the exact time. I'm not here to do that. I don't want to try and call this for the exact low at the time because there's no 100% confirmation. And I think that then leans itself to acting like a lot of the talking heads did in the bull market, saying Bitcoin has to go to 100K. So people start to feel like the market can keep going up and they hold on. And so if this wasn't the low, then that could lead a lot of people to say, well, I was buying because you said it was the low. And if the market did go lower over the course of months, a lot of people would be pretty pissed off. So all we can do is basically just manage our reward and risk based on the chart data and the information that it's giving us. We're pretty sure it could be the low. It would be around the low prices, everything that we've been talking about here. I've given many times a buy zone, a cycle bottom buy zone beneath $20,000 down to about $11,000. So we just act accordingly, and should it be the low, we'll know in a few more months' time. So the end of that phase a successful secondary test in the area of the selling climax will show less selling than previously and a narrowing of spread and decreased volume, generally stopping at or above the same price level as the selling climax. So what have we seen? Well, this is potentially the stopping volume here. A few weeks ago, I thought maybe this was a stopping volume, but when we look at the price, 18.5 down to 18.1, a few $100 difference. Essentially, we've had a couple of stopping volumes here. This could also almost be one, as it has done here back in June, but really you want to see the market rise up to a automatic rally and then come back down to test that low. So it was $600 off the previous selling climax. So that's a pretty good area to say that we've had a secondary test. Sometimes the downtrend can end less dramatically without a climactic price drop, but we definitely want to see something like a climactic price drop because that enables us to have a clearer indication that larger operators are definitely initiating accumulation. So once we get through this area, we could go on a reaccumulation of the trading range. So something that maybe forms above this particular trading range here between 17 and 25K. In that case, we won't see the same sort of signals that we're seeing at the bottom, if in fact this is this bottom stage. Now, we're not there yet, so we don't have to worry too much about that, but it's just keeping that in mind for any sort of reaccumulations that are outside of this trading range. In case we miss out, someone has missed out at this bottom range between 17 and 25, I think it's many months away. Maybe we'll get a spike above, but I think we'll probably settle back in over this period. All right, so phase B in Wyckoff Analysis is building a cause. So we're potentially moving into that phase B area now where we build the cause for why we should increase in prices later. In terms of the news, you throw any particular topic you want to at it, but just based on the charts, we're not expecting to know that until after the fact. All we're seeing now is the possibility of the smart money continuing to buy up. So we've got a few data points and a few facts here on the charts, which signaling that is probably that period, even if the market does go a little bit lower. Overall, it is definitely looking like that bottoming range, something that we've looked at here for many months now, talked about, prepared for, warned, cautioned, all that sort of stuff. I don't know how else we can talk about it in that sense. I'm not trying to buy the exact bottom. I'm just trying to buy an area at and around the lows here or a little bit lower. So phase B is building the cause. and it involves purchasing shares at lower prices and checking advances in price with short sales. So basically what the smart money is going to do now is push the price up, test some of these higher prices, try to test higher prices again, sell it short again. So even if they are net buyers, meaning they'll have more in the bank that they want to, more crypto or more stock or whatever it is that they're buying, they'll have more in the bank. They'll still keep some aside to test high prices and then slam it back down on the market to test where the next low comes in. That's what the smart money will be doing. It's guaranteed they'll do that. For us, we just got to see where that high comes in and where that next low comes in to give us the signal for whether this is a true accumulation or if more supply comes in than anticipated and then starts to dump the price a lot further down. And this is explained in Institutional Buying and Selling imparts the characteristic up and down price action of the trading range. So we're seeing the trading range. We're probably going to see more ups and downs within the trading range or slightly out of it on either end. But either way, this is potentially going into the phase B of the Wyckoff accumulation schematic. And finally, for the phase B, which is probably several months away, when it appears that the supply is likely to have been exhausted, the stock is ready for phase C. But we're probably still a little way off that. As it says here, it could sometimes take a year or more. So if it isn't until sometime in Q1 or Q2 of 2023, we may see the range get broken and we continue just to maybe form higher lows, but we're still basically trading within the overall bottoming range here for Bitcoin. Now, Bitcoin isn't your traditional stock. It may have bigger ranges as well and come up to test those low $30,000, maybe get into the mid 30s and basically come back to test some of those previous tops that were put in May before that final dump. And it also lines up with those lows that were happening in January and February as well. So somewhere around that mid 30s to low 30s. I mean, that would just be a clear sort of area that you could expect Bitcoin to jump up to test, especially the institutional buyers and sellers, to test those levels to see if any more supply comes in up there before shooting that price back down. Now, there's no guarantees in trading or investing, so we've got to be on alert in case this does break down. Like we've seen in the past, we were waiting for some sort of selling climax to come in on the drop here, but you can really see from the volume when you compare it to the previous periods, basically in November, December, and then again into January, you just didn't get that volume like you saw previously in May. However, this volume is starting to come through now. We've got May in 2022 and also June in 2022. So there's a much bigger case for this to be the accumulation compared to what it was in January and February, which ended up being redistribution. So the buyers and the sellers basically coming in with a lot more supply and then dropping the market down because no one wanted to buy up Bitcoin at any higher price. And that, of course, caused the market to fall. So we can always be wrong, so we're going to be prepared for that. I think overall that buying range is still pretty good value for Bitcoin longer term. You know, I've talked about that before on the channel, that cycle buy zone based on Gann fibs. But if this is the accumulation range, it does look like we're breaking into phase B of that range, especially with yesterday's breaking above the bear market downtrend on the daily chart as well. Set up a nice cause for the market, as Wyckoff has called it here, basically building the cause for this to go higher. That's the update for our Wyckoff analysis. Things are looking good, but I still expect there to be several more months of decision making here, especially for institutions who are trying to set large positions. This isn't just like jumping onto your local Coinbase and buying a couple $100 of Bitcoin. If they are really setting multi-million-dollar positions, maybe even trying to get a position up to $1 billion, it's going to take time, especially when the volumes are low. So they don't want to spook the market and start accumulating too much too quickly. There needs to be tests to the upside and, of course, the downside. This all takes time. Main thing is, let's not get worried into the FOMO or the FUD of either direction of the market. And of course, remember, the news is always there to fool us at the worst possible times. Don't fall for the noise. Join us over at the Investor Accelerator. And if you want to learn more with your trading and investing, setting up those plans before the bull market, check out TIA Premium. This is going to be your best chance for this lowest price before the price increase. And obviously, BitGet. Bybit, get your account set up, 0% fees on spot pairs over there for Bybit, and up to $8,700 of sign-up bonuses for BitGet. Links are in the top of the video description. This is all special with TIA Crypto. Guys, you've got videos popping up here on your left-hand side about trading portfolios, so check those out as well. I'll see you at the next video. Until then, peace out.